Solana is exploding right now, trading around $87 after ripping out of the $70 range, and we are now approaching a level that could determine whether Sol makes its next major move towards $100 and potentially $110. But there's one problem. On the lower time frame, Solana is getting extremely overextended, and I'm seeing warning signs that a pullback could happen first. So is Solana about to break $90 and make a run towards $100, or are we about to come back down and retest the $80 level? I'm going to break down every time frame and show you exactly what I'm watching. But before we go over the top-down analysis, I want to go over this winning trade that I gave you guys on the last Solana episode. Around July 14th, 2026, I was seeing a falling wedge here with the measured move taking us to about $87. The entry was around $72, and as you can see, we hit the same exact measured move, and we actually went up as high as $88.10. So congratulations on whoever took this setup. This is a big win for the FlexCandle community. Let's start off here with the monthly chart. Right now, Solana is at $87.05. And overall, I gotta say that this is still looking bearish because we are below the 21 moving average. We are below the 50 moving average. The stochastics are low. We are starting to point up. The RSI is pointing up. But for the longer term, we're technically still bearish. I'm liking this green engulfing candle that we're starting to get for the month of August, but there's still 11 days and 5 hours. We have to see how this closes. And frankly, we need to get back above this 50 moving average at $102 and eventually above this 21 moving average at $135.80 for me to be like, okay, now we're bullish again. Because if you really look at it, this is technically a bear flag and we could still go down lower. Now, if we head over to the weekly time frame, this is starting to look a little bit more bullish. The stochastics are on the way up. We're starting to get a little bit overextended here. The RSI is pointing up. You see that we ripped up, but we're still below the 50, so still a little bit bearish. What's bullish is that we did get back above this 21 moving average. Again, we still have 3 days and 5 hours. Let's see if we could hold above this 21 moving average, which is currently at $79.62. That's going to be a very good support level for us. Now, what I'm watching here is that this could be a possible inverted head and shoulder. It's not a textbook one, but I definitely am kind of seeing it. It's a small one here. And the measure move to this kind of shows that we could make it towards this 200 moving average. We already actually started breaking down that 200 moving average is at $108.72. Now, you guys know, in order for me to really be bullish on a stock or on a crypto, we need to be back above the 50 moving average on the weekly time frame. But first things first, we definitely got to get back above this 200 moving average, and then we could work our way back up. But right now, I could see us getting a little run towards $108, and then we'll see what happens from there. We head over to the 3-day time frame. Stochastics are on the way up. You can see that the RSI ripped through the 50 range, and we're all the way up here now. And we got back above the 21 to 50. The 80 moving average is holding resistance for us right now. That's at $88.97. If we could break through that, I see us going to the 100 moving average, which is at $99.44. And then notice here that in the VRVP, there's a gap here. There's a couple of stops here, but we could probably rip through that. We're bullish enough and make it back to 125. And ultimately, what we would want to do is get back to this 200 moving average at 137. Let's see if we can make it at least to this 100 moving average and then hold the 80 moving average as support. On the daily time frame, stochastics also starting to get a little toppy. If we're bullish enough, of course, we could still drag here for a while. But this is what's bullish to me, is that we finally broke above all the moving averages, especially this 200 moving average. That's at $81.25. Now, what we don't want to happen is lose this 200 moving average. We are overextended. We are far away from the 21 moving average. That's at $75.89. So I'm anticipating that we're possibly going to go sideways here, wait for this 21 moving average to cross up on the 200 moving average. And then from there, once it touches the candles, we could continue to go up from there. So either we're gonna go sideways or we're possibly gonna come down. Ultimately, I don't want to lose that 200 moving average. If we do, I do not want to lose the 21 moving average. But right now, this is bullish that we're above the 200 moving average. I'm liking this. Now, the 8-hour time frame, we can see that we're really overextended here. Look how far away we are from the 21 moving average. The stochastics are toppy. The RSI is super overextended. We're in this black region here. There's a pullback that's going to be coming. Now, we're pretty bullish right now. So with the hype, I wouldn't be surprised if we make one more move up. Maybe that's the move to $100, and then that's going to be psychological resistance. And then from there, maybe we retrace and start coming back down towards the 90 area, 87 area where we are now. So it's not out of this world to get at least one more push up, but eventually we're going to have to cool off because we're way too overextended from this 21 moving average. The same thing pretty much goes here for the 4-hour time frame. We can see that the stochastics are toppy here. The RSI has an Adam and Eve double top. 21 moving average is at $79.83. So that's why I'm saying $80 should be the support. So what we're going to do here, we're going to do two scenarios. We're either possibly going to go sideways here. We'll fill out this flag, go sideways, wait for the 21 moving average to catch up to price, and then we'll probably break out and we could hit, like I said, $97 to $100 range. Another possibility is that instead of flagging out, maybe we start retracing and we do more of a falling wedge. And if that's the case, then will be this measure move here and we make it to $93. So either way, I'm still technically seeing a move above $90, whether it's between $93 to $100 around there eventually, even if we end up falling back down in this falling wedge. So let's see which one plays out. We don't have enough candles yet, enough information, but I believe that the next move is going to be towards $100 if we don't lose certain levels. If we head over to the 1 hour time frame, the stochastics here are rolling over. We kind of have some bearish divergence. The RSI here is also kind of toppy. It looks like we want to roll over. Now we are riding the 21 moving average. This could be a double top here. If we lose this, we could probably end up falling down, probably here to the VRVP where it's like $84, but then look at this gap. We could easily fall back down to $81. So if we lose this 21 moving average, I expect this to come down to this 50 moving average, again holding the support of $80. As long as we could hold above $80, that move to $100 is still realistic. We start losing the $80 level, then that's going to become resistance instead of support, and then we can have lower prices. The 15-minute time frame is also riding on top of the 21 and the 50 moving average, so that's kind of bullish. So that's what I would expect right now. We hold $80, we make it to $100. We could probably still make it to $100 now, but I think $100 level around there, $100, $110 is going to be resistance, and then we'll get some type of a pullback. But right now, overall, I am bullish on crypto and I am bullish on Solana. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the move. Catch you on the next chart.